This question is from Tim, all right? Tim says, hey, I know the FOO allows us to have a 3 to 5% down payment on our first house, but would it still be good just to save the 20% or more so that I can lower the payments later and increase my savings later? Saying, I know you said that I can do 3 to 5, but should I only do 3 to 5, or should I really go for 20? If I can get to 20, should I do for 20? How do I go about making that decision on what is the most advantageous thing in my circumstance to make sure that I'm following the FOO the right way?
Yeah, now realize, and I couldn't remember because I was still in the proud papa moment, but it's Tim, was this for a first home? Because that 3 to 5% is only home. For the first home. And realize there is a difference, something that I maybe I don't highlight it enough. 3 to 5% is just to get you in the door of home ownership, but there is a downside to it. And I see this in the comment section is PMI. A lot of times, if banks, when they're going through the whole mortgage process, if you don't own 20% of your home's value, they will start charging an PMI. It's an insurance to protect the finance company from you defaulting on it. And a lot of people are very quickly, if you do 3 to 5%, you're hoping your house either appreciates or you pay it down over the years so that you can get rid of PMI. Because now back in the day, old school moment here, PMI was not deductible. At least now it is deductible. But I still stand by the fact, Tim, that, I give you, it really depends upon where you are in the financial order of operations in the process. Because I've also seen people who had a windfall of money come their way, and then they were young and went and put down big chunks of money on a house, even beyond 20%, but then didn't have their emergency reserves, weren't funding their Roth IRAs, weren't doing all the things. So just you need to have more of a full, complete picture. That's why I love the financial order of operations, is it lets you walk through the way you should look at money. So, Tim, if you have the money and because of your success and you have already funded Roth and stuff, I like 20%.
Sure.
But it all depends upon what else you've got going on in the background. 3 to 5% is supposed to be a gateway access point, because I know homeownership is so hard these days.
I agree with everything that you said there. The only thing that I would add to it, that I would encourage Tim to think about, if you've not downloaded our wealth multiplier, Brian, you have a wealth.
Yeah, I got that over here too.
If you go to moneyguy.com/resource, we have a wealth multiplier that shows you how powerful every dollar you have can be. It's the reason why we have these koozies that say this $1 beer cost me $88, because we know what our money can turn into, especially when we're young, especially when we have a lot of time. The decision behind putting down 3 to 5% versus putting down 20%, I think, once you've solved for the rest, I'm following the FOO, and I know that whichever one is going to keep my mortgage payment, my housing cost less than 25%, it becomes an opportunity cost discussion, right? And you have to make the assessment for you. Where do I think, if optimization is my goal, because again, we have to let our goals drive the decisions that we make. If optimization is my goal, where do I think that my dollars can be optimally used? And so it depends on like mortgage rates right now. If I can go get a 6% mortgage rate, if I put an extra 17% down, extra 15% down on the house, I'm going to save that interest. I'm going to save that mortgage rate. Or if I had those dollars that I could go deploy, might those dollars be able to work harder for me somewhere else? Now, I hate giving you this answer, but it's a spreadsheet calculation, and you have to make the assessment. You have to assign your specific variables to figure out, if you've done all the other things and you're following the FOO and you've checked all the boxes, when it comes to your situation, what's the most optimum decision for me? And I think I would let that drive a lot of my decision-making process.
Yeah, it's no different if you're in that moment of abundance, meaning you've got a lot of, money's coming in, good job, you have assets in the bank. This is no different when, like, we tell you 23.8 for buying a car is so that you have reliable transportation. But if you are living this abundant life, still paying cash for a car is the ideal. No different than when you buy a house. If you're living in abundance, especially with interest rates being over 6%. 20% is the ideal because it avoids a lot of the hassle with the banks, the underwriting, and the PMI. But we try to create a system that allows reality to kind of sit inside there too. Because there's a lot of, as the system gets harder, as the process of society and access to cash and other things, you've got to have things that allow you to move within the system, and that's what we've tried to create.
Love it.